All right, welcome to Going Live with Good Soil, episode 47. Matt, you did a great job with Farzad last week. I read some of the comments, and everyone said that you're the star, and I should just bow down to you and let you run the show, pretty much. You did a really good job. I've
No,
been
thanks.
you,
Reading the comments in general is a dangerous
it
idea,
is
so I wouldn't
dangerous.
put too much stock in that.
Yeah, it is dangerous. But that particular comment had like 8 likes, and none of our other comments had any likes. So I was like, oh man, that's that
We've got a
was
good
a
thing
little.
going here, back and forth. That's for
We
sure.
do, we do, we do, we do. So, all right, good, going live, good. So, episode 47. Last week, I was in Puerto Rico and then Miami for the All In podcast. I mean, the All In podcast summit, and that was really interesting. Learned a lot. They're coming out with a lot of the talks on their episode page for people that are interested. Um, but the macro market, man, it's that's what we start off with, and this macro market's brutal again today. I mean, yesterday I guess it was up. Tesla was down, or not up that much, so it didn't feel like it was really a big rebound day. But yeah, I mean that's our big thing is
It,
Tesla, and it's down today with the macro market.
it has seemed like Tesla, so there's the concept of beta where, Tesla would move at like say a beta of 2. So if the market's up 2%, Tesla would be up 4%. It seems like Tesla's beta right now is like an absolute value of -2. So even if the market's up 2%, Tesla's down 4 or something like that. It's just been so significantly underperforming everything. Um,
Hmm.
so that obviously can't stay the case forever, and the lower Tesla goes, the more I'm honestly like salivating right now because the fundamentals of the business are still so strong.
Yeah.
This kind of, sorry to go off on a bit of a tangent here, but I was just looking at the like stock price history this morning, and the day after Tesla reported the like surprise Q1 just absolute massive earnings beat, the stock opened at like, it was like 1077 or something very high like that, which seems like so long ago.
It does.
um but it was just kind of a reminder of like, yep, Tesla's fundamentals are definitely going to win out in the end. I don't
In
know
the
how many
end.
quarters it's going to take
Yeah.
to kind of get there for the stock to reprice. But a strong Q2 would go a long way. But it seems
Yeah.
more likely a strong Q3, Q4 would stem the bleeding and possibly, kind of re-rate higher. So
Yeah.
in the long
I
run,
agree.
I'm super optimistic.
I'm super optimistic in the long run. If I could buy like a 8 year out option for Tesla for like 1,000 strike price for $500, I'd put all my money into that right now. Like that's that's how confident I am in the long run. It'll definitely win out. It's just scary the next few months, next year, whatever, however long this lasts. We're in like a winter of investing in equities or asset allocation in equities. It's like a brutal winter spurred by the Fed, and just everyone's the herd is just like running out of equities and the asset allocators, which really drive valuations of equities. It's just you don't know how irrational on the downside this can go for how long. That's what's scary. And so on my personal side, I've tried to clear out, my margin balance and all this stuff because you just don't know. You got to prepare, and it's a brutal time right now for the growth in tech stocks that are down. I was on Dave's channel and I told him a joke, but like I keep thinking of it. What's the fastest way for a tech or growth stock to be down 90%, Matt?
I did hear that. So to be down 80%, then get cut in half, right?
That's right. That's right. I feel like that's where we could be right now in that punchline. It's scary and sad. And for all those of us who've been investing in growth tech stocks, and Tesla's lumped into that, I mean, Tesla's down 50% from its all-time highs. It's not even down 80%, so it could go down much more temporarily. I don't know. But I agree with you, Matt. In the long term, it's the lower it goes, the more attractive it is if you have dry powder to deploy into Tesla stock. Just it's going to go much higher in the long run.
Yeah, I mean, it does seem like the downturn we've seen, like I thought a month ago, it was like, all right, well, this is getting ridiculous now. The
Yeah,
leap pricing in particular was looking super attractive, and so if
yeah,
you did move into leaps, then you've seen those get hit even harder than just the pure equity. But
hmm
ultimately, I'm feeling, as ridiculous as this is, I'm feeling surprisingly comfortable and surprisingly peaceful about the situation, even though on paper my face is being ripped off. It's
Yeah.
like,
Yeah. Yeah.
this has all happened in like a month and a half for the most part. I mean, you could go back to the all-time highs and it's a little bit more than that. But like if you look at, like I was saying, where we were after the Q1 print, which was not very long ago,
Yeah.
we've had basically no news since then. And I don't know, did you see that hit that bid interview that Yashu did with was it Dan Ives, I think, yesterday?
I didn't see that. Yeah. You know what? Dan Ives is a good TV personality, but ever
Yeah.
since he went long on Nikola, he had that call of like a buy rating on Nikola. I lost all, like, that was the red flag, the king of all red flags to me. Like, I can't listen to anything this guy
Yeah.
says going forward. But anyway,
Well, that
how was
was,
it?
I mean, it was kind of hilarious because he was talking about all these things of like, oh, the distraction of, Twitter and, Elon, doing all these political moves and all
Hmm.
this stuff. And he's like, that's what the market is thinking right now. And like he listed, I don't know, there were probably 3 or 4 other things that he listed that were, huge issues, but
Hmm.
only in the short term. And
Yeah.
I have to imagine, 12 months from now, like however this Twitter thing shakes out, whatever Elon does with his litigation, his legal team, and all the political ranting and raving that he's doing right now, I don't think anybody's going to care about that when Tesla posts, Q2 2023 earnings, a year from
Yeah.
now.
Yeah.
So, I kind of think, okay, well, the market's giving us this, huge discount opportunity. I don't know what's going to go on with macro, but I'm becoming kind of more convinced that the inflation concerns are potentially a little bit overblown, and maybe we can go into that for a little bit also.
Yeah.
But I just think ultimately, like the PE can't go to anything's possible, but I have a hard time imagining that the PE goes down to like a trailing PE of 20, for example.
Yeah. Well, I think
So,
I heard a note. I'm trying to remember which interview, but I have to look. But I think Apple's PE temporarily went down to like 7 or 8 during one of the crashes. It might have been the 2008 or 2001. And at some point, Apple, but this was before I think the iPhone was like, put out and stuff. But these PEs, yeah, we look at that long term, but I think in the short term, the market can be very irrational and these PEs can get compressed to like what we think are like impossible right now. But it's possible. Like I'm just not, I see that as a possibility, not to completely deny,
mhm.
that's all.
Yeah.
I don't think it's likely, but in a short, it's almost like the flash crash. No one thought that makes sense, right? When there was the flash crash and all that,
Mhm.
and this could be like a slow moving version of that in some ways in terms of valuations or something, and asset allocate. Everyone's just rushing out. It's just like a follow the herd mass hysteria of asset allocators, just kind of all like closing out of their equities positions, moving money out of equities in general. And then everything suddenly looks super attractive and everyone rushes back in, but not after it's been overdone like ridiculously, which is feels like it already is, but it's not, nothing's trading on fundamentals right now. This is just all macro headwind herd mentality of asset allocators, I feel like.
Yeah, I think that's the quote. I mean, nothing's trading on fundamentals right now. It's so
Yeah.
true. I mean, you're seeing Tesla kind of get treated like all the kind of like terrible SPAC companies out there, who like just had these valuations that never made any sense to begin with, and so then they're down, 80%. And Tesla, Tesla's not down quite that much, but it still
Yeah.
is kind of caught in this macro environment where the valuations are just kind of getting cut blindly in my mind. I mean, looking at like Rocket Lab and Lemonade and all these companies that are trading. I don't think Rocket Lab's actually below cash value, but Lemonade's certainly trading below cash value right now. And so like there's just, the market is cutting with a very broad knife right now. And I think it's going to take some time for companies that don't have earnings right now to kind of prove that they're more legitimate and have some staying power. And I think those will get re-rated once the dust settles. But for companies like the Apples and the Teslas of the world who actually have earnings power, actually have positive cash flow generation and reasonable metrics that you can use to value the company in the short term, I think those ones should rebound
Yeah.
faster than the rest.
The good businesses for sure. And it's hard to say which of these software as a service companies will be around long term or not in my mind. But I think the good ones will, obviously. And also, I really like hard tech, companies that make things like Tesla, obviously, or Nvidia or Apple, those companies that make things, they can't just disappear into thin air. Where software as a service, I feel like can disappear into thin air if some other better software as a service comes along and disrupts it or disintermediates it. It can happen much quicker than making physical things, which would be much slower process to as we've seen with cars. Like it takes decades to disintermediate ICEs into EVs, right? It's not like something that
Mhm.
can happen in 1 or 2 years, like in software.
Yeah. Yeah, in a little bit of a tangent here, but did you happen to catch Brett Whitten's tweet about AI researchers' average estimate for how long artificial general intelligence
I did.
is? Like,
I saw that. It basically saying it's gapped up a lot in the in very recent history, right? In the last few months, even,
yeah, in the
right?
last few months, so it was a logarithmic scale, so it was kind of hard to tell when the average estimate was. But I think the average estimate for how far away we are from artificial general intelligence, it was something like well north of 10 years, and just in the last 6 months, it's gone sub 10 years.
Mm,
And that's what, like a year ago, that's kind of a theme you and I were talking a lot about. Is we're on the verge of this like massive technological disruption. People, AI was kind of like this buzzword, and then it like kind of went out of favor. But like the actual economic potential
yeah,
of real world artificial intelligence, like Tesla is building and a handful of other companies, it's like massive. The economic implications. I mean, like GDP
yeah,
multiplying potential. And
yeah,
so at some point, I think that like upside optionality on those companies that are actually making progress in that area will have to get valued in as well. And so I don't know when it's going to be. I mean, that's probably more than 12 months out, but that's like to me when I'm looking with my long-term investor hat on, that's it's like such an exciting period to
it
be
is.
alive in right now.
It's a big
So
impact. Yeah, it's gonna have a big impact on society in lots of ways. Yeah, it's crazy. I mean, in terms of the macro markets, I mean, that's going to have a big effect on the macro markets do you think it's going to be like a switch flipped where suddenly within like a month, everyone realizes, oh, this was solved by OpenAI or Tesla. And you think the economy is just kind of like the markets are going to like macro markets are going to like really go up, like saying, realizing the potential of AGI coming to fruition? Or do you think it'll be like a slower drawn out, like, multi-year process that happens in stages, and maybe we're in the very beginnings of that now.
I mean, it's very hard to predict how it's going to pan out, but I would my gut tells me that people are going to underestimate how big of an impact AGI really is, or even if it's just not AGI, but some highly valuable economic improvement that has narrow AI. So like
Yeah.
robotaxis would be the perfect example of that, right?
Yeah.
Huge increase in overall economic output, like GDP impacting technology in a very
Yeah.
meaningful way.
Yeah.
And so the market might say like, oh, look, like Tesla's doing a good job. Like their FSD package is a lot better now. And so maybe like there's a great article about that or something like that, and market sentiment changes, and then Tesla pops 10% or so. Like I kind of think it's going to be that way. And
Yeah.
in my mind, I'm like, no, 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 that's like 100% plus, valuation implication. So I kind of
Yeah.
think it's going to take time for people to both realize the magnitude of the opportunity,
Yeah. I mean, I
and
can
then
easily
to
envision
translate.
all the amazing things that the Tesla bot will be able to apply with AGI, very seamlessly once they have the technology for it. With the cars, it's a complicated thing because the high stakes are very high. It's like live or die by a simple mistake that the AGI, the real world AI could make of driving on the road. So, and there's regulations and laws and all kinds of stuff like that. So, I feel like they're close to the technology for the cars. They're getting there. But for the bot, I feel like they can be much more experimental and just like put it out there and be like, hey, try our beta AG, house cleaning pro. What's the bot going to do? Like break a glass or something accidentally? Like I feel like it'll be interesting when the bot comes around and he's going to do the demo at AI Day. That's a huge, I'm super excited about the AI Day in August 19th. It's on my calendar. Like a kid, I'm like marking my birthday on the calendar. I'm like counting down the days. I can't wait to see the demo of the bot. So
Yeah, I was surprised that they were going to do something so quickly. So
yeah.
I'm really curious. I was kind of surprised they even announced an AI day, number two. So that I mean, it wasn't that long ago that they had the first one.
Yeah, I think it was a year ago, August last year. So it's almost exactly a year later, I think. Yeah. So yeah, exciting. I guess anything else with the macro markets we want to touch on? Kathy Woods, she had a interesting discussion with a Piper Sandler analyst. I listened to it
Mhm.
kind of, but I didn't catch the schematics they were showing, the graphs or charts. But my case was they think inflation is going to whipsaw back to deflation pretty soon before we know it. But is that sort of in a nutshell what you heard, or?
Yeah, I mean, there that was it, and there was another Bill Gurley at the All In Summit, which you were at. I just caught
Yeah,
that there was a panel with him and a couple other folks as well, and it was basically the exact same thesis that Kathy and Nancy Lazar, I think her name was, put out there. And the first time I heard Kathy's, I put a brief thread out there on it because I was kind of skeptical of her viewpoint that inflation was going to kind of come ripping back down. Um,
yeah,
she kind of cited some of the buildup in inventory, specifically at Walmart and Target and Cisco. I think they had like these unprecedented inventory buildups in Q1. And so if you've got way too much supply and your demand is falling because we're in a recession, well, the only thing to do is to drop prices to try to move that, and that would
yeah,
act as a counterbalance against inflation. It's like, okay, well, that's a fair enough thesis. That does make sense on the surface, but then I started thinking about, well, commodity prices still are incredibly elevated. Look at oil and gas, and that translates to
yeah,
energy prices, and that that has ripples through the economy that is going to be with us for several months or years to come, even. So that's maybe a counterpoint against what Kathy was saying, but then Bill Gurley on that All In podcast or the All In Summit was giving kind of more examples of other areas of the economy that are going to come down. So, maybe an obvious example would be interest rates are rising, and so people can't afford homes like they used to.
that's right.
So that's downward price pressure on one area of the economy. And then automotive. I mean, that's one that's really clear. I mean, that was way too hot, and
Yeah,
that's highly
yeah,
sensitive to interest rates as well.
it's
We're
cooled
already
off.
seeing inventory levels really build up like drastically. So
Yeah,
that's another potential pool of inflationary data. And then just this morning, we saw some purchasing manager index, which is kind of like an early read on potential inflation down the road. Their sentiment index, I forget exactly what it's called, but there were three different measures for it, and they came in drastically lower than expectation. And it was actually down sequentially month over month, which is to me is a huge sign that there may be some downward price pressure, at least within some areas of the economy. So that's really meaningful because if we do see some easing of these inflation issues, that limits the potential the rate hikes that the Fed may end up doing. So if you're
yeah,
one of these people who's in the camp that Fed's going to have to raise rates to 6% or something like that, well, if inflation turns around in the next 6 months, call it, it's probably not going to be reasonable for the Fed to raise rates quite that high.
hmm
And then in the bond markets today, sorry, this is a bit of a monologue, but I've just been thinking
no,
a
it's
lot
good.
about this. The 10-year treasuries like falling, pretty significantly from where it had been. So it was down last I looked to like 2.88%, I think, which it had been well over 3%. So the bond markets seem to be, or at least the yield curve seems to be indicating that there may be less kind of long-term rate pressure than maybe the worst case fears, and the the selling of equities may indicate could be the case. So I don't know. I had been in the inflation is a very big concern that's not going away anytime camp, and I'm starting to see reasonable hypotheses. I think that the opposite may be true, and that doesn't mean that we're out of the woods by any means, because you probably still have pretty significant GDP issues.
hmm
But in terms of equity pricing, if inflation kind of gets in check, that's very good news.
Yeah, yeah, that would be good news. Yeah, I mean, inflation. We've been hearing it for a while. I feel like the indicators we get, I think, are kind of like from the past. So what's going on right now in the economy? I do feel like inflation has slowed down dramatically from where it was, several months ago. But I don't know if the indicators that the Fed is following are like real time by any chance, any close to real time. I feel like they're from like a month or 3 months ago, So I'm still worried that the Fed still thinks inflation is hot and will keep the foot on the pedal for rates and signaling that. So we'll see. I mean, there's I think isn't Powell supposed to be testifying today at some point?
Yeah, I think
So
so. Yeah,
maybe
and
he'll leak some
it's
dovish language out if we're begging him to please just say something dovish so that the market doesn't keep panicking and selling. Yeah.
yeah. I mean, who knows how long it'll take? I mean, the May CPI print will be out there in mid June, so we're still a ways
Yeah.
away from I think from like
Yeah.
a significant rally that would reverse some of these losses that we've seen recently. But
Yeah.
some of the preliminary data and frankly just the logic of where people are expecting CPI to go, to me it makes sense that it should be coming down, or at least not be 8%
So, do you
forever.
know if the May CPI? I mean, I'd love to drill down to someone who knows like how it's calculated specifically. Do they take the prices of goods and services on the last day of May, or the middle, or the beginning, or is it like an average weighted price index? Like, do you know by any chance?
I don't know the details. I would assume it's some sort of weighted index rather than
Yeah,
like a
probably.
month end balance sheet sort of thing. But
Yeah,
yeah, I'm not entirely sure. And there are different baskets, and there's like the
yeah,
core CPI, which is calculated differently than
yeah,
the main CPI. So people have different weights on those, and
yeah,
um, I still do think we're going to have significant commodity price pressure for a
yeah,
little while, but a lot of other areas, it does seem likely that they're going to come down.
yeah. And the China lockdowns for like the entire month of the last month, pretty much, and it's still apparently very restricted there. Like, I mean, Tesla's having you could see all the details, all the things Tesla has to go through to get their workers back to work. So a lot of the economy of China is still, I think, locked down to a large degree, and I think there's a lot of downstream effects, with supply chain disruptions that'll, for the world economy to some extent, sort of like what we saw with the initial COVID lockdowns and shutdowns, but maybe to a lesser degree. So I don't,
Yeah.
we'll see how much that plays into inflation sticking around or not. But what do you think about Tesla and Giga Shanghai? It sounds like they're close to being back to full capacity. Apparently, do you believe that, or what do you think?
Yeah, it's interesting because there's I follow Troy Tesla, like, obviously, and if anyone
Yeah,
wants to know like kind of where the company is, I'd highly recommend being a
yeah,
patron of Troy because he clearly does the best work on this.
yeah.
But he's been kind of ringing the alarm bell for a long time now. And he's been right, frankly, that the issues in Shanghai were more serious than they were.
Mm,
But there have been, like, to me, there's not a high degree of confidence on exactly where we are. Like, there's
hmm.
been these conflicting reports of I forget the exact details, but there was some Chinese minister of something in in Shanghai that said production was at like 80% of the levels. But then there was another kind of internal Tesla memo, which I think people are placing more weight on, that they were at, I think it was like 1250 a day or something like that, which was something in the neighborhood of 35% of capacity.
Mm.
So it's like, all right, are we at 35 or are we at 80? Because there's a huge difference between the two. And I think it's more
Yeah.
likely that we were at 35%. But then there was another report that came out just yesterday that Tesla had produced 26,000 units, I think it was, since
Hmm.
the plant came back online. And that was modestly higher than where Troy Tesla was. So
Hmm.
then the question becomes, all right, well, how quickly can they ramp back up? And if they really are starting two shifts, I think it was today was the date, then, what percent do they get to? And, putting it all together, it kind of makes me think we're going to be somewhere in like the, I don't know, 260,000 unit range, maybe 250, somewhere in that area.
Yeah.
But Tesla could potentially surprise a little bit higher than that. So, I think it's definitely not good. It's going to be down, but my sense is it's not going to be maybe like a doomsday scenario of only 35,000 units out of Shanghai for the whole quarter or something like that, which really would be quite terrible. But how are
Yeah.
you kind of thinking through the risk and where we are right now with deliveries for in world production, more so for Q2?
Yeah, I mean, I think there's serious risk in terms of the stock price sentiment. I don't know what the, you gotta, I guess we gotta figure out what like the quote unquote whisper number is with the buy side institutions, the people, the institutional money that owns Tesla, because you got to think that they know about this Tesla quarter most likely being, much underwhelming compared to the first quarter in
Yeah.
terms of production deliveries. You got to think that they're accounting for that by now. So maybe that's part of the reason Tesla's dropped, along with the macro market and the Twitter charade and political, stuff, hesitations people might have. Maybe it's all combined, but if it's not accounted for yet, and like Troy, maybe we're just in our own little like corner of the Tesla Twitterverse, and we kind of look at this stuff more seriously than any institutions. Then I mean, Wall Street analysts, quote unquote, I think it's like at 270 or 280 or something like that still. It was like
Yeah.
305 until recently. It was like, yeah, they're way behind the ball, the quote unquote Wall Street analyst estimates, right? So
They are, but Gary Black had a really good tweet about that a while ago. He said, yeah, some analysts just don't update the volumes for the numbers that they put out, but they just kind of put out a new EPS estimate. And so what you've
okay,
seen actually is that the EPS estimates have kind of come down pretty significantly. So last quarter, they posted, 222 or something like that. Or no, sorry, 322 of earnings per share. And the current estimate for for Q2, last I checked, was like 219. So, which is really close to what I'm projecting right now with kind of the lower numbers. So it may be like my fear is, there's probably going to be that headline number that, oh my gosh, Tesla misses,
yeah,
analyst estimates for deliveries by,
yeah,
50,000 units or whatever. But I think when it comes time to EPS, which is really the more important thing, I don't think there's like, to me, the miss is baked in the EPS numbers.
yeah,
So headline
yeah.
risk maybe,
I
but
hope
I think the
so.
investors are actually factoring that in already.
Now, here's an interesting question to pontificate about how the market might react. Do you think, like, there's got to be Netflix diehard investors, like a miniature version of the Tesla Twitterverse, but Netflix investors? I know there is, right? And maybe they talk to each other and they kind of feel like they have some information. They understand what's going on with Netflix the same way we think we understand what's going on with Tesla. So, do you think those people expected Netflix to have its kind of metrics reported in its recent quarterly earnings, or do you think that was a surprise to them?
I think that was a surprise. I mean,
I would hope so. I would hope so. Because if it's not, and they sort of expected it, and then the market still crashed, that's what I'm worried about. Because we sort of expect Tesla to do 250 to 260, and if it does that and the market, then we expecting it, then that's what I'm saying. Does that make
yeah,
sense
I
to
mean,
you?
that one I think was a huge surprise. I mean, and like what we saw yesterday with Snap issuing guidance lower, that was clearly a surprise, and I mean that shocked the
Yeah.
whole markets because that
Yeah. That
I
was
think got
very,
everybody.
yeah.
Yeah. And at the same time, you've got Zoom like surprising on the upside, and it's like, okay, great, plus 5%. It's like good news, like the best possible news is plus 5%.
It was up
Like if you
20%
beat,
until Snapchat did its freaking ruined its party. Yeah. Yeah.
thanks, Snap. Yeah.
And what's Zoom doing today even? Is it even holding its gain? Zoom is still up 6%. Oh, wow. Thank goodness. Okay.
There we go.
I was expecting to look at Zoom and see it down 5% along with like all the other growth tech stocks or
That does seem to be
formerly
the way things have.
anointed.
Yeah.
Yeah. It's not technically valued like but it was formerly anointed as like a growth tech stock. Now it's sort of become a value stock. So, yeah, it's just money's just leaving equities. It's just an asset class that asset allocators are running from at this point. It's kind of scary. I think you'll see a lot of companies go private or be taken over as taken to be private. What VMware was recently acquired. I think you'll see lots of these acquisitions coming up if valuations keep getting lower. It just is going to be too attractive for private equity to take some of these companies private, I think.
Yeah, I mean, at these prices, it does seem reasonable. I mean, that is something I kind of worry about with Lemonade, to be honest with you, that,
Mm.
gosh, they're trading at such a discount right now.
Yeah,
Somebody could just
below
buy them for the
cash.
tech. And
Yeah.
so it certainly could happen, but I think like a lot of companies are very risk averse anyways. So, there could be some increased M&A. I don't know, but my sense is people are going to want to wait until the market settles somewhere, and then maybe you'd see some of that. But I mean, with the S&P making like 3-4% moves like on a daily
Yeah.
basis, it's
Yeah.
kind of hard to pin down a price and say, all right, yeah, we'll acquire you for that price, 6 months from now when the deal closes, with that
Yeah.
much uncertainty.
Yeah, yeah, exactly. It just feels, and the VIX is like hardly over 30, and like it just feels odd because the S&P is down 1.74%. I just saw on the TV, and that just feels like it feels like a low volatility day to me, for relatively speaking to what it's usually like. So it's just, yeah, you're right. 3 to 4% moves is like expected almost at any day of the week. It could be a 3 to 5% move, especially the Nasdaq. So it's a weird time we're in. Yeah.
Yeah, yeah, it's very weird.
Yeah. So also, the Rocket Lab and Roblox earnings. We've never really got a chance to talk much about that. I know you didn't. I don't think you talked about it much. Is there anything that stuck out to you? Struck out. Is there anything that stuck out to you about Rocket Lab or Roblox earnings that you thought was interesting?
Yeah, so I'll start with maybe the like one biggest takeaway from each one of them without doing a full deep dive because we're already half an hour in. But to
Hmm.
me, the big takeaway from Roblox was they're very serious about monetization now. So the plan for the longest time was always kind of grow the user base, kind of get the flywheel going, get the developers in
Yeah.
house, and kind of do monetization once you've reached a critical mass. I think Dave Bazuki wisely, thought now is the time, like with the market with where it is, and frankly with Roblox with where it is and its kind of maturity level, it's time to start, pulling that lever a little bit and trying to increase monetization. So I think that was a really strong signal. The market didn't really react to it too much, or maybe it did actually initially, and then kind of got lost in the noise of macro.
Yeah.
But that could drastically change the company's, financial profile. So, I mean, it's one of those companies that's very hard to kind of pin down the valuation on because you've got to really project out, 4 or 5 years and look at what you think the company is going to look like from a, top line and margin perspective, and then discount it back. So, if they can start making some significant progress on monetization and get those, revenues up and get, investors an idea of what the financial profile could look like as they continue to grow, I think that would be really good for the stock. So that was a big
Hmm.
takeaway on Rocket Lab, or sorry, on Roblox, and then Rocket Lab. I think one of the maybe two main takeaways. One, they're incredibly capital efficient. They built a new pad
Yeah.
in New Zealand, and they're building out their Wallops facility. So doing a lot of investment while they're also building a new or developing the new rocket. And they only spent $7 million of capex. Like it's just a staggeringly low number. Like how does a company like that only spend $7 million in capex? It
Yeah.
was just
Yeah.
astonishing. So that was one, and then they're diversifying their revenue. I think more than people realize. About half their revenue is going to be coming from launch, and then half and 50% and probably growing over time is going to come from providing services and software and products to other participants within the space industry. So I think people tend to think of them as just a launch company that's going to get eaten by SpaceX, but I really view them as much more of a vertically integrated provider that's creating value throughout the entire industry. So
I
those were
agree.
my takeaways. But did you have anything else for those two that stuck out?
No, I agree with you on the Rocket Lab. The capital efficiency was striking to me, but the with Roblox, I think the advertising is a good news. Well, monetization, I think they mentioned they're going to start offering more advertising options, maybe for the developers or such. But I think the one thing that also was interesting to me was the demographics they showed. Their supplemental
Mhm.
materials, and they're really growing that 13 and over demographic. And so what that's telling me is the kids who play Roblox, they're sticking Roblox. So that 13 and over, it might not necessarily be a lot of new users that are like 14 or 15-year-olds trying Roblox for the first time and sticking with it. My hunch is that a lot of that 13 over demographic growth that they're showing is a result of all the kids that are every quarter, a certain amount of kids are suddenly 13 years old versus the last quarter, and 2 quarters, 3 or 4 quarters later, they're 14 years old, whatever. So all the kids that are becoming 13, they're sticking with Roblox, and as opposed to leaving Roblox for other things like Fortnite or whatever. I mean, kids still play Fortnite and such too, but I think they're doing a good job of holding on to the attention of their daily active users as they age. So I thought that was impressive, and also their growth outside of the U.S. is tremendous. Especially in Asia, and in the U.S. they
Mhm.
sort of hit a plateau. But I think they mentioned in the call something about they expect that to kind of steadily increase again soon. Now that the initial plateau that seemed like a plateau where they're like -1% year over year was more of just like a rebound from the COVID spike. So they're
Right.
still growing, but the COVID spike rebound sort of neutralized their growth to make it look like they're flat, if that makes sense. So they expect to have like a steady growth show up in the U.S. again pretty soon. So I'm going to keep a close eye on that. But I like the growth, the continued growth of their monthly or daily active users. I think that's what excited me.
Yeah, and when you couple, the kind of aging demographic that they have, at least within the, that older cohort, with some of the stuff they're trying to do, like on concerts, for example, to
Yeah,
me, that's a really exciting possibility when you're going to have a demographic which has slightly higher disposable income than, say, a 12-year-old,
yeah,
to devote to something like a concert. And they've already had, really positive feedback when they started, done a couple of those kind of, I guess I would call them like pilot concerts or events like that. So the
yeah,
potential for like essentially a brand new business line to be meaningfully financially is really strong, I think. So I'll
yeah,
be curious to watch how they build that out over time.
yeah. All right. Well, why don't we go to the Q&A? Alec, behind the scenes here, is going to queue up some questions for us to read, and we'll go over for the next 20 minutes or so. So from IR_Rizzle on Twitter, in the event of a renegotiated deal, what do you think would be a fair price for Twitter, assuming 12 to 14% are bots? Yeah, I think someone did comment to Elon about that. Like, so since more than 5% are bots, shouldn't you reduce the price by whatever, like a comparable percentage? Um, I think that combined with the market revaluation of all tech stocks. I mean, I think if Elon said he's cutting the deal, he pays the $1 billion fine, and then he sold his 10% Twitter stock, I think Twitter would immediately be trading in the teens at this point.
Yeah.
But he couldn't just come back and buy it then at 25 bucks. That would just be like it would be looked at imagine the lawsuits and all the headlines of market manipulation, all that. So and
Yeah.
that might not necessarily match his integrity. I think he's trying to honestly just negotiate, not honestly. Well, he's trying his best to negotiate a more fair price other than $54. And I think the stock trading at $36 is showing that 54 is absurd. Um, so I think the fair price, assuming if it's 12 to 14% bots, if the market was still where it was when he initially made the bid, I would say it should be like $50 to 54. But because the market's really tanked, I would say it should be like 40. 35 or 40. I don't know. That's my thought. What do you think, Matt? That's just my gut. I have no basis on that. I just threw it out of the thin air. What do you think, Matt?
If it were just the bots and macro, I might agree with you, but like to me, Twitter's business is very, I would say, analogous to Snapchat's, with how dependent they are on advertising revenue. And so if
Yeah,
Snapchat is a
that's
canary in the
true.
coal mine for where
Yeah.
corporate advertising is,
Oh my
then man,
gosh.
I'd be running for the hills, if I'm trying to forecast,
Same
Tesla
with
or
Instagram and Facebook and
yeah.
Meta or whatever, right? That could be bad for them too. Yeah.
I would think so. I mean, and so that's like brand new information as of yesterday evening. And so I'd be wanting to see, okay, how's the ad spending coming in right now for Twitter? Because that's probably a bigger valuation impact than the bots, I think, honestly. So, I
Yeah.
mean, yeah, as I'm looking at all the detail, you got lower multiples, you got a bigger bot issue than was realized, and that's going to create pressure on your revenues. And then you've got like a very massive decrease in advertising spend right now. Like to me, $20 seems like within the realm of possibility. Now, maybe you do it at a premium, so he could go for 25 or 30 or something like that. But
Yeah.
to me, I think there's so much bad stuff kind of cutting against Twitter right now that I don't think the price can reasonably stay higher than say 40.
Yeah. I mean, Snapchat was trading at like $70 plus at one point, like a year or a year and a half ago. I can't remember exact date. I just remember watching it was like 70 plus. And Twitter is high. The highest it got was like in the 60s, I think. their market caps are not the price per share, but now Snapchat's down to $13. So, Twitter without this Elon stuff, I feel like could easily be in the teens. It's just they're very similar businesses, as you mentioned,
Mhm.
Matt, in the advertising business model and such. So, yeah, I mean, yeah, Twitter would be much lower for sure, I think, if Elon wasn't in the discussion for them. Obviously. So, all right. From BJ23 Air on Twitter, was there any discussion about Metromile at the All In Summit in Miami? Both Chamath and Freeberg are investors. No, I did not hear any mention of Metromile um, at the All In Summit. No, but that's a good question to ask them. Yeah. From Tesla Maniac 32, I like the name on Twitter. Do you think Elon is aligning himself with the moderate right as a move to secure better government support for his companies? I don't think he's like doing that nefariously. Like I don't think that's his intent. I don't think that's his motive. I mean, that might be a byproduct of what he's doing, but I think he's just following his heart, honestly. I think he's just a genuine guy and like he wants to do what's morally right and optimizes the best chance of good outcome for humanity, and he sees what's going on in politics and his companies are doing great things for humanity, but they're not acknowledged or helped at all by the current political system or whatnot. And so I think he's just doing what he thinks is right. But a byproduct might be that you know the government might support his companies more, and they should. They should be fighting for his company. Both Democrats and Republicans should be trying to woo Elon and his companies. In my mind, they shouldn't be vilifying him like they have to some degree. What do you think, Matt?
Yeah, I agree with you. I mean, I think for as long as I can remember, there's been, I think, people kind of mischaracterizing Elon's actions because they don't understand the way that he thinks. So, he'll do something which seems odd, and people will kind of ascribe nefarious motivations. But I think he really does. Like, I've been thinking about trying to pull together a chart or something that says like all the different things that he's doing, which seems so weird. Like, what are the actual motives in plain English, like
Mm,
translating Elon or something like that. So
yeah,
I may try to pull that together at some point.
that'd be
Because I
neat.
think his motives are generally pretty straightforward. Just that he wants a better outcome for humanity, like you said, Emmett, and he's
Yeah,
concerned about a trend that he sees. And so, like at its most basic function, I think he sees the kind of increasing amount of censorship and cancel culture, which is probably an overused term, but the lack of respect for divergent opinions. So you and I, Emmett, we disagree on individual theses or individual
hmm,
topics, but we have a huge amount of respect for each other, so we can talk rationally. Not get offended if you think something differently than I do, and vice versa.
yeah,
That's the way human society really progresses, and but there's been a huge, I think, pushback where there's certain sacred areas where you can't have an opinion different from the establishment on XYZ topic.
yeah,
And I think he says, well, no, that's not first principles reasoning. That's actually kind of a threat to human progress if we can't have disagreements on certain things. So I think it
hmm,
really is just him trying to um, like preserve rational thinking, and that's why he's doing this. It's not trying to get contracts or make money or anything.
yeah. I think people forget that Elon, to try to understand Elon's incentives. They're not human. They're not normal human incentives. Like this guy does not work to consume. Like this guy works to work harder to better the common what humanity as a whole. Like he's not living on yachts. He's not buying. He sold off most of his assets recently. He's living in a small house. He works like 100 hours a week. He's like sleeping on factory floors. Like he doesn't need to be doing any of that. Like he's the only multi-billionaire that works anything close to that hard. Like it's insane how hard he works considering how wealthy he is. I mean, is there any other multi-billionaire that's like working anything close to as hard as he does on his business? I don't think so. I mean, it's crazy. So he does find time to play and beat Elden Rings, but maybe I think he does that instead of sleep because I think he sleeps like 3 hours a night or something. I think he's mentioned in the past on some. So, but yeah, it's crazy. He's a different person, different than all of the rest of us in many ways.
Yeah.
Next from Tesla Maniac on Twitter. Again, do you believe that the market has priced in all upper bound negative macro forces that are currently in play? That's the trillion-dollar, multi-trillion-dollar question, right? Is it how much of the macro negative stuff is priced in? Like, I don't know. Yeah, I mean, I thought it was priced in every month for the last few months, but it's not. When's the month where it's all priced in finally? I don't know. You have any thoughts, Matt?
Yeah, I don't know. I mean, yeah, it's pricing in a lot of really bad news already. I mean, that's clear. So, I mean, you can certainly paint a pretty nasty picture where there's um, companies are cutting costs and we've got inflation, and so you've got like 1970s style stagflation. That's like the worst case scenario probably. I don't think that's really where we are. I think it's a different situation completely. But if the economic data does continue to point towards that becoming a higher reality, then yeah, we could certainly have more to go. So um, it's not clear, but in my mind, the most likely outcome is that we're kind of near the bottom. But this is not financial advice, and we've been wrong before. So
Yeah.
everybody I think has to kind of make up their own mind of where we are.
From Justin on the YouTube comments, question for Matt: what do you think is a reasonable range or of PE multiple for Tesla?
Yeah, I mean, financial theory would tell you that like a peg ratio is probably the right way to look at a company that's growing fast like Tesla. And so, if you assume Tesla for the next several years is going to grow their earnings per share by like about 50% on average. And so maybe it starts at like 80% and then ends up at, I don't know, 30% or something like that. But on average over that time period, it's 50% earnings growth, which seems reasonable to me given how they're trying to increase the top line, deliveries of 50% per year. So that's really kind of assuming no operating leverage, which is probably a conservative assumption. Uh, excuse me. But if that's the case, and you say, all right, well, if you're going to grow earnings by 50% per year, then financial theory would tell you a PEG ratio of 1 is appropriate. And so that would translate to a PE ratio of 50. So then you can use that as kind of a baseline of, all right, well, where do you think the next 12 months earnings are going to be? And you can use your forward assumption from there.
That's a good answer. Good explanation, Matt. Thanks.
Mhm.
From Evan Glansman, question: let's say we are still floating around similar prices and macro sentiment at the end of September. How do you think the market would react to a 400,000 plus production and delivery Q3 from Tesla? That's a great question. I mean, I would be super pumped. The business would show to me that it's booming. Like a higher floor is in the Tesla stock at that point, in my mind. But if the macro market is trading like the way it is, like who knows? It could have a similar reaction to what Zoom did. Like it could be up 20% or 25% on the earnings report after hours. But if the whole macro market is down 3 or 4% the next day from Snap giving worse guidance or whatever, Tesla might end up the day only up 5% or like Zoom is now. Like we've seen that before with Tesla where they've had these numbers that have been surprises to even us and they just show the growth. I think one quarter in the last summer was like that. I can't remember. And certainly, Q1, there was certainly a muted reaction the next couple of days. But yeah, I mean, I worry about, to me, it would put a higher floor of how low Tesla would go. Maybe instead of Tesla getting to like, potentially $300 before what Warren Buffett steps in and starts buying it. Maybe it would be like $400, and then suddenly before Warren Buffett steps in and starts buying it, or whatever. So that's the more exciting thing to me. Like the business itself, the fundamentals are really very strong. If and when they produce that delivery number. What are your thoughts on the question, Matt?
Yeah, I mean, I completely agree with everything you said. It's like in the short term, the best possible news, like sometimes does not move the stock the way that you would think that it should. So,
Mm-hmm.
like the Q1 numbers, for example, to me that moved the floor up pretty significantly.
Yeah.
But even still, the stock is falling. And so now it's like, all right, well, how far can Tesla go into, value stock territory before people start, picking up, just buying it for value reasons, like you were saying,
Yeah.
like,
Before it hits the floor. Yeah. The floor that has been rose up a bit. Yeah.
yeah. So, I mean, you mentioned like the PE of Apple at one point of like 9, and in my mind, like that only, like, you can only get that low, I think, if the market really doesn't believe that your numbers are sustainable. So, like Coinbase is trading at a 9 because people expect that the revenues and the profits are actually decreasing going forward rather than increasing. So right now, I think if I'm trying to read the tea leaves a little bit of like, what does a non-Tesla fanatic think is going on right now? They probably think, okay, well, we're going into a recession. And so what happens in recessions is car companies get smashed, right? Like,
Mm-hmm.
people cut spending, and particularly for luxury cars, quote unquote, that are, $60,000 or more. Those are going to, demand for those are going to dry up. And so Tesla's building factories precisely at the time that we're entering a recession, and demand is going to dry up, and they're not going to be able to sustain, the $3.22 earnings print, let alone grow that going forward. If that is the hypothesis that, many people are thinking, which, by the way, the facts don't justify that whatsoever right now. Like, the backlog is actually increasing, even though like the economy is falling apart right now.
Yeah.
I keep checking that and like waiting for signs that, demand or the backlog is shrinking, but that's not happening. So, if we kind of get to this point where Tesla continues to have the pricing power that they've had, which translates to higher margins, and they still have a, call it 6-month plus backlog, at some point, the bear hypothesis, like, the market's not entirely inefficient. And so I think at some point, there would be a rebound, but to what level, if they do say $4 and, you annualize that at a 50 PE, like I said, well, that's an $800 share price.
Yeah.
But then if they continue to grow that, then, like, that's the thing with the PE ratio. If they continue to grow, like, let's say in Q1 they get to $6 or something like that, which I think is definitely possible.
Yeah.
Then you've got a new higher floor. And so that's where, as uncomfortable as this market has been right now, when you go out long enough, I think 12 months is a pretty good time frame to look at. The floor is just going to get raised so much, assuming, the worst case scenario doesn't happen, and, operationally they can't deliver, that I believe that the stock price is going to have to kind of get repriced upwards at some point.
Yeah. Yeah. From Farzad, how you doing, Farzad? Question: if these deflationary pressures continue, what are the chances that the Tesla gross margin percentage is significantly higher late this year, since all price increases were done in preparation of higher inflation? That's a good question. I haven't thought about it. Positive, potential positive. What are your thoughts, Matt?
Yeah, I mean, I think where it might show up. So there's probably two things to look at. One would be the demand side. So, when we were talking about used car inventories, and even new car inventory, well, I think mostly used car inventories actually are starting to build up. So that's saying that, the demand is lower now than it had been. So Tesla's not seeing that phenomenon yet, but it's possible that if the kind of pain continues to build, they could see that. And so then they may have deflationary pressure in the terms in, translating to, needing to lower prices. So if that were to happen, that'd be bad news for gross margins, obviously.
Mm-hmm.
But on the other hand, if the deflationary pressure kind of translates to lower commodity prices, so lower steel and lower, all the elements that go into the batteries, and they don't have that demand problem, that would obviously be very, very good for gross margins. So I think it remains to be seen exactly how it play out. But, as I'm looking at the data right now, demand doesn't seem to be slackening, so that's good for pricing pressure. But commodity prices don't seem to be moving either, so that's not necessarily good for gross margins. So I wouldn't assume any drastic change other than, just kind of their continued manufacturing improvements.
From Mark Gomez, Tahada, at which price Tesla should for the share? At which price should
Should Tesla
Tesla?
do a share repurchase? I
Yeah,
guess.
which should Tesla? I couldn't read that. Yeah, even if
There's a little typo there.
even it costs cash, safety, or missing M&A opportunities. I don't know, Matt, you have any thought on this one? I couldn't quite understand the question here.
I mean, I think it's getting at should Tesla do a buyback, or which is something
Okay.
that oh gosh, who's Leo Kogwan has been really pushing for that.
Yeah.
In the past, I've been, I would say, against it. For the reason that they have a pretty ambitious capital spend plan, and you want to keep some reserves, but they've got $18 billion in cash, and they're generating about $2 billion a quarter right now, and increasing of free cash flow. So that's operating cash flow minus all your capital expenditures. So that's earning nothing on your balance sheet, just kind of sitting there doing nothing. And with Tesla's stock price where it is, to me, it actually does make sense to do a small share purchase program. I mean, I wouldn't want them to do like $1 billion a quarter or anything like that, but some amount where you're kind of maintaining your fortress balance sheet in the event that the economy really takes a turn for the worse and you need to survive some period of uncertainty, or just your capital spending increases more than your operating cash flow. But to me, that seems like a prudent thing to do right now. And I think it would send a kind of a good sign that management's really optimistic. I don't think they'll do it, but I'm actually kind of in favor of it for the first time. But what do you think? I heard you on Dave Lee. You were kind of neutral on this idea.
Yeah. No, I'm certainly neutral on it. I could go either way. At some point they should do a share buyback, or issue a dividend. I don't know if now is the time, but they can't spend money as fast as they're making it pretty soon. So they're gonna have to do something. That might be a year, 2 years away. Obviously, I mean they're printing what, a billion or a couple billion per quarter about right now, something
About
like
2
that.
billion.
So
Yeah.
yeah, so are they spending? What are they going to spend that money on? They're still, and they're doing this while they're ramping up 2 factories. And even if they get 2 more factories going, they're still going to be making. They're very capital efficient, and they're going to need to do something with that cash. I don't know. Some people suggest that they're just going to buy a bunch of their own cars, robo taxis, maybe, or buy a bunch of their own bots from themselves, just lease it out and make their own business out of those things, be a fleet operator themselves. That's maybe that's a good use of their own capital. Sort of be their own robot investment trust, so to speak, that we've talked about. Yeah, there's a lot of an interesting headline, by the way, just came across. I noticed, and we hadn't talked about this yet. I wanted to mention is the SpaceX just raised more capital at a 125 billion valuation. The private market, it's so crazy. Like, you know, valuations across the board are coming down, also in the private market, right? I mean, but
Hmm.
SpaceX is raising capital at a higher. I think the last time they raised capital was like 95 billion or something like that, or it was close to 100, but not
I
quite
thought it was
100, I
right around
think.
100. Yeah.
Yeah. And now they're 25% higher, but that was like a year ago, I think, when they raised capital at that. It was maybe a little less than a year ago, back when the stock market was before it crashed, right? So you got to think that, if SpaceX was publicly traded, like this is sort of like the floor, like we're talking about the floor, right? I feel like this is the SpaceX floor is 125 billion, the money they're raising it at right now, because the markets are kind of crashed. If SpaceX was a publicly traded company, it probably would have been trading up to like a 200 billion plus market cap valuation on the public equity side. And right now it would be corrected down, 50% like Tesla to like 125 billion. And we'd be like, oh my gosh, how come SpaceX is down to this now? You know, But because SpaceX is privately held and they only raise capital once a year if they need to or whatever, then we don't really have that emotional attachment to the valuations like we do for equities, or we don't buy on the way up to near the high. It's just it's a whole different mindset. It's kind of interesting to think about. Anyway,
Yeah.
next question from Rudy Romo. Question: with Tesla now in the 600s, how do you see the possible stock split? Well, I don't know if that giga split I was pitching is going to happen now. 50-1. I don't know if that's going to happen now, but probably 10 or 20-1 is my thought. What do you think, Matt?
Yeah, I mean, like a 10-1 at 60 seems pretty reasonable. So like a $60 stock price, that's not in any risk of being delisted or anything like that. So
Yeah.
to me, that seems reasonable, and I think they'll still go ahead with it.
Yeah.
And now I don't know that that would necessarily be a catalyst, but I don't know. Maybe people forgot about it and they're like, "Oh, stock split. Yeah, we should rally 10% or something like that." Hopefully that's the case, but I kind of suspect it might not be. But I think it'll still go forward. I mean, that should be coming out in the next month or so here because we've got the shareholder event in on August 4th, and I think the proxy statements are going out in early June. So yeah, we should get some more information soon.
Yeah, yeah. Let's just do one more question. It's a little after 10:30 here. We're about at the hour mark here. So one more question from Breakfast Pizza. I like that. Thoughts on
Delicious.
June 2024 leaps? I have like probably a couple of DMs a day. Some days it'll be like a half dozen. Some days it'll be like one or none. But I get so many questions in my Twitter DMs about like, what about these options? What do you think about this option trade I did? Should I get it? And I don't answer most of them. Sometimes I feel like I need to have a cut and paste, like just put it in the discussion of YouTube Live because so many people ask this. And we don't really give investment advice in any way, shape, or form. The leaps are very risky, options in general. People have been slaughtered from leaps in the last 6 months for sure. And as we've seen, stock, if you own all stock, you're down 50% on Tesla, which sounds horrible. But if you own a lot of leaps, you're down a lot more than 50%, you're probably down 80 or 90% if you own a lot of leaps, from the highs, so maybe more. So it's very risky. And we do believe the stock will in the end become much higher valuation, but we just don't know how long these depressed valuations can last of the equities in general. Like we could be in a new era where people used to widely accept a PEG of 1, like you said, but maybe it's a new PEG that's kind of widely accepted for a while, like until, interest rates are more certain or if inflation's completely under control or whatnot, so equity stock, yeah, for sure. We like, Tesla as a stock ourselves personally. The leaps, you just have to be prepared to lose all of it. Any options, I feel like with Tesla, you got to be prepared to lose. If it's part of your speculative money, I think that's, I speculate and I buy Tesla leaps with some speculative money that I know I could lose all of, but it's risky. Anything you want to add, Matt?
No, I mean, yeah, it's high risk, high reward. So yeah, we really try not to comment on any specific options contracts for that reason. But you can make a lot of money or you can lose it all. So that's the
Yeah,
tricky thing with options.
yeah, yeah. It's a little more gambling like than investing. But over a long, if you can manage it well, it can be done. But it's tricky and it's very turbulent and volatile. So painstaking to say the least. I've been doing it
Yeah,
for a while, and it's you lose a lot of sleep sometimes. So
yeah.
yeah,
Times like this for sure, but
yeah,
you do like you can couple it with analysis in or event driven investing hypotheses, and that's what we try to do with the fund is be reasonable and not just gamble like we're throwing darts up on the board, but even still
yeah,
we've seen this several times where like our investment thesis has been correct. Like there was one company we haven't even talked about, but like we got the earnings estimate exactly right to the penny. This was not Tesla.
yeah,
Stock was up like, I don't know, 20% or something like that in after hours. We're like, all right,
yeah,
cool. Like we actually nailed this.
yeah,
And then like the next day the stock went right back to where it had been trading.
yeah,
So it's like you can have the best analysis, you can be spot on your thesis, and sometimes the market just doesn't react the way that you would think that it would.
yeah,
So
yeah,
clearly that happened with Tesla with the Q1 print. It's sinking right now, and so I'm
yeah.
optimistic on where we go from here, but I was optimistic last month too.
Yeah. I think the thing people have to think about, and I referenced this at TeslaCon, is there's a difference between the business and the stock, right? So we can be confident on the stock and what the earnings number will be and revenue and profit. We can be right on that where everyone else was wrong on that, and that should favor the reflection in a stock price in a similar fashion, you'd think. But the stock is different than the business, and over a long time horizon they kind of correlate, but on any short term time horizon, options obviously they're not they don't necessarily correlate, and so it's risky. And so the stock, because it's not correlated I mean, the option is a derivative on the stock, and the stock is sort of like a derivative on the business in a way. And so like the options is like, although the option is directly correlated to the stock price, as the stock's moving up and down based on the delta that the option has on it, you don't have that. There's no like official delta, unfortunately, of a stock with the business. Otherwise, I'd be like it would be different. But yeah, the business and the stocks are different, and you just have to try to think about them separately in that way, but realize that they're connected in the long run for sure.
Yeah.
So, all right, that's it. Great episode, Matt. And we'll be here next week, same time, same place. And hopefully not another down day where, it looks like we talked Tesla down to almost a new low of the day. It was close to the high of the day at 6:52 when we started, and now it's at like 6:30. So,
Oh, what did we do?
I don't know. We were telling people that this could go on for a while. I don't know. So,
Well, it was
I don't know.
nice to have you back this week, Emmett. And Farzad did a great job while you were out, but definitely good to have you back and get the conversation rolling again. But
thanks.
I don't know. Maybe we need to eat some juju or something next time around.
Got to get some kind of
stock price.
I can
move
see
in the
how
right direction.
I can see how I think that happens in baseball or competition. People have those. What do they call that?
Why am I blanking on that term? Yeah, I
I'm
know what you're
blanking on that
talking
term.
about.
But you do these things like LeBron James throws the chalk up in the air. Or, I don't know. I'm going to try something like that before our next live stream. And if the stock goes up, I'm going to try it the next time. And if it happens like 2 or 3 times in a row, I'll have a new habit, and I'll tell you about it if it works.
We should wear only green. I'm wearing red today. That's the problem.
Yeah, that's right. Yeah, that's we got to maybe a different shirt, or I don't know. I'll figure something out. I'm going to try something like that next time. All right, Matt. Good chatting. Talk to you later.
Thanks, Emmett. Thanks, everyone, for listening.
All right.
Bye.
Thanks.